Hello, and welcome to the View from Sibos 2020. This is the first year that the conference has been held virtually. I'm Joy McKnight, Managing Editor at The Banker, and I'm joined by Michael Hogan, EMEA Head of Transaction Banking at MUFG. Michael, thanks so much for joining me.
Thanks for inviting me.
So my first question is obviously the question everyone is asking, which is around how COVID has impacted banks and how have they reacted to the pandemic?
Mm-hmm. Oh, it's a good question, Joy. And I think the question probably is, how has it not impacted the banks? But what I would say is across a number of areas. There's a financial impact, there's an operational impact, and I think there's a real lasting impact on the people as well, which is interesting. And just touching on the financial impact as well, you can see just in the bank share prices how these have been hit. So they're a clear sign of the expectation on what the earnings of banks are going to be. So I think fortunately the banks have increased their capital position, so they're more solid and stable, but it will definitely have a financial impact on the earnings going forward. So I think that's the first part. The second part, I think there's definitely been an operational impact. There's been, if you want, a forced acceleration on the day-to-day digitization of what banks do. And this has been brought about by necessity. There was a big potential experiment about maybe people work from home a little bit more, but 6 months from home has really proven a great proof of concept that people need to work differently and people can work differently. So I think after a few earlier hiccups, I think the operational side of that has actually come into play, and banks have shown pretty good resilience and creativity in what they do and how they do it with their clients. And the final one I'd say is on the people side. Being forced to work from home for 6 months has been an experiment which has never been done before. And there's a shorter term impact on that. People have shown that there's flexibility in working patterns. And an industry which is normally used to going into offices, you can operate outside of that. And I think the longer term, there's an upside as well, which is a wider access to a wider talent pool.
And then how has the pandemic affected the way you do business with your clients?
Yeah, across the board, really. I think I'd split them into two categories. It's difficult to create new clients and to build new client relationships in this way. I think, but I think that doesn't really apply to maintaining them. I think you can maintain client relationships like any relationship, and the technology does help. From an overall relationship, I think it's actually had some upside. It's given us a chance to prove that we're there for the long term. It's easy to promise that, but actually to prove it takes something like this. And hopefully we've been there now and shown that we're there for the long term, providing that liquidity, providing those services when they need it, looking for creative ways to overcome those obstacles that we talked about before. So whether it's credit, whether it's transaction banking products and services, we've been able to support them there. And I think secondly, on a personal basis as well, I think everybody realizes this is not just a banking problem or an individual corporate problem. This is a real global societal problem. So actually being able to sort of get an insight into personal lives of people and our clients and vice versa as well. It's a little bit letting your guard down, but in a nice way. And I think that helps build those relationships as well. And finally, I think I mentioned before on the operational side, I think there's been some real blockages, especially take trade finance for transaction banking. Whether we like it or not, we can talk about blockchain and a lot of the nice smart stuff that we're doing, but underneath there's still a lot of paper flying around and physical stuff which exchanges. And I think something like this has really given rise to creative solutions as well about how we interact with the clients and how we move stuff from A to B and whether we really do need to move stuff. So I think enforcing that undercover sort of digitization has really been helpful as well. So looking for positives in a difficult situation, I think there are some under there.
And then how do you think that the fintech environment has been evolving, especially in transaction banking?
Well, I think in one aspect they've struggled. I mean, everybody struggled, and everybody struggles in their own way. You can't not struggle in a situation like this, and they're corporates like everybody else, even though they've got some really good ideas. So I think access to liquidity and access to liquidity over a long term when the costs are still there, but the revenues might not be is a bit of an issue. But that aside, I know that we're increasing what we do with them, whether that's in the new product development space or the RegTech space. So that collaboration question, which has always been bubbling along in the background, has really come to life. And I think going forward, given the cost constraints that they will have and the cost constraints that the banks have, I think we'll probably accelerate it and bring them further together. So I think two sides of the coin, really, depending on the fintech that we're talking about. But we've definitely seen an uptick and we expect to be working even more closely with them going forward.
And my last question is really about sort of some of the other trends that are coming to the fore that you're seeing.
Yeah, and it'd be nice to say great technology trends as well. But I think one of the things which has really started to come to the fore, and it has been bubbling along, is a real focus on what's it all about. and sort of a wider perspective on life and global issues, climate change, sustainability, and from getting it right, and not just the pursuit of commercial goals as well, but when doing the things that make a difference for society. And as a Japanese bank, there's a saying, "Sampo Yoshi," which means, very badly translated, a three-way win. So whatever you do as a corporate, you need to do it properly for the client, and it needs to benefit the community. And I think that's a nice CSR type mandate, which has been in place for a while. But ESG, the growth of both sides of the balance sheet, issuing green bonds, project finance, increasing focus on renewables and wind farms, and we're right at the thick of that. And on the other side of the balance sheet too, in terms of the deposits, supporting those from a transaction banking perspective have come to fruition, and also providing then an investment base and an investor product base for those green types of bonds as well. So I think everybody's sort of joining in, and banks have a real role to play, and they can do that and promote these goals, not at the expense of society, but in line with society as well. So I think that's a good thing all around.
Well, excellent. Well, thank you so much for your insights, Michael.